What is all this telling us? I was talking to Guy Adami.
I understand. Well,
thanks for watching, everybody. Mad Money starts right now. What is all this telling us about the AI trade?
One of the terms we've used is the sanctity of CapEx. And I think for a long time, people felt like the CapEx spend was somehow etched in stone as it came down from the mountaintop on one of the, slabs of Fred Flintstone, like granite. It's not etched in stone. And I think we're learning that now. And I think most of the market, in my opinion, is sort of built on this CapEx spend. And if it's vulnerable and if you start questioning the financing around it, then you have problems. I'll say this. NVIDIA, to me, is sort of ground zero. 167 was the low in September. We closed around 171 today. That's a bit of a line in the sand. But you get through there, and people are going to start talking about the reversals and moving averages being crossed. So NVIDIA is the one you have to watch in this entire thing, Brian.
All right, Tim Seymour, NVIDIA down. Yeah, listen, again, down 2.5%, 3%. It's not some huge haircut. I do worry that we don't want to make too much of this, but is Oracle its own thing, or is it symbolic of something else?
Blue Owl may not love Oracle, but Blue Horseshoe does love Anacott Steel, just to be clear.
Really?
Anyway, so,
yeah.
Really?
So,
that was great.
The Fast Money Wall Street trailer, by the way, Guy.
It's unbelievable.
It's a must-watch. You can find it out there on the internet. Oracle,
on
to me,
whatever holiday you may celebrate.
Yes. Well, Oracle is being pushed well below the valuation it started here, which is what's fascinating. And ultimately, they could make a decision to not be as CapEx heavy, to not necessarily chase the order flow from companies that may or may not be worth $500 billion or not. So what I think is more interesting on a day like today, this is Mr. Glass half full, is that the other 493 were flat. Effectively. That's not fair. But the equal-weighted S&P is effectively flat. And those that benefit from AI may actually be having a pretty good run here. So the market is a bit over its skis, I think, in some of these trades. And I think there's a lot of momentum that still could come out here. But if you're looking to own Oracle, unless they are going to spend like a drunken sailor, I think this is a valuation that you're getting any of the AI optionality for free.
Given their spending, just be careful. You don't want to insult drunken sailors.
No, look, I mean,
because this is all going to be debt spent.
Sometimes they buy some good stuff, too.
Debt-fueled spending. And we're looking at a stock, Dan Nathan, that arguably has had an unbelievable run. But yet, we showed the credit default swaps. There's attention being paid to Oracle. What do you make of it?
I mean, it really hasn't had an unbelievable run relative to the other names you'd associate with this trade. I mean, it kind of joined the party last year. It was a distant fourth place in this cloud business. And to your point earlier, I mean, they can spend however they want, but they don't have the money to spend. So they have to raise the debt. That's why a Blue Owl is so important to this build out for them, right? And if you think about the hyperscalers, they were already building these clouds and they were ready to build for, this AI sort of trade. And they had, many of them, their own models. And if you're not, you're Amazon, you're investing in Anthropic, you're investing supposedly in OpenAI right now. You're putting those models on your cloud service so you can sell that compute and folks, their customers can use it. The problem is, Brian, and you just said this, you remember CDS, right? Credit default swap. Well, the last time we saw this is like, okay, first inning sort of stuff if you want to go back to the financial crisis. But the last time we really focused on that, you would have thought a lot of these arrangements, a lot of these contracts between these financial institutions, you would think that there was some sort of sanctity, as Guy likes to say, about those sorts of deals they had with each other. They were until they weren't, right? And so when you think about some of this stuff, there can be some dominoes. And the other thing is, if the market is saying that Oracle is not going to be able to fulfill these contracts, from OpenAI and others, well, you would think clouds like CoreWeave would be trading much better, right?